To break it down simply, I think a multifamily deal, they're going to look at the long-term rent comps and make sure that they're in the window, regardless of how you're operating the property. But if it's a hotel that's got the hotel zoning, they know that you have transient guests that are staying for one night. Maybe your average guest stay is 2.5 nights for the year, but they're going to give you the credit for all of that. So if I can buy a hotel, I think there's a lot of mom and pop operators out there that own these hotels, and they've owned them for decades and decades. They're not utilizing a lot of marketing platforms. They're definitely not on Airbnb or Vrbo. And that's a big play, just for us to take over a hotel, even if we didn't do any renovations and we just marketed these rooms on Airbnb and Vrbo, we would bring in a massive tick up in revenue.
Who's this? Oh, you're an entrepreneur? Oh, you're a real estate investor. Oh, you're trying to learn from those who did it. Well, come into the lab then. Put your white coat on, gloves on, notepad, and let's build, y'all. Real estate experiment. What is happening, y'all? Today I got a brother who's keeping us warm here. I had to bust this out for the episode, man. He hooked me up. He knows it's cold out here in New York. We got summer's capital. Give a little goodies. Rich is trying to keep us warm, but even what's more important than that, he's keeping the rest of the community warm. Because Rich, you're doing some interesting things in the real estate space, and I wanted to give you your flowers right here. Because man, I've been watching you, and we got a chance to connect in a few different places now, in Miami and in San Diego, I think it was as well. And honestly, you had done a phenomenal job with your social as well. So I felt like I already knew you at the time too. And but for some context, man, like, you're the guy who was kind of playing the game. I'm giving Experiment Nation some context. I want to roll out the red carpet. You were playing the game, you were working, then you just started networking with some individuals from work, took that 401k, you put it to work, short-term rentals, then you started scaling into boutique hotels now, and you're running that play, and you got excess of what, 50 million worth of real estate, and you're running the play the right way. And you're also very strategic in how you are, building your team. And one thing that jumps out to me is being very clear on, when it's time to turn that chapter and be surrounded by the individuals that you want to be surrounded by. So I want to give your flowers as the founder of Summers Capital and FortuneCribs, vertically integrated business. I'm taking notes, man, because that is how you run the play. But man, without further ado, bro, what's going on? Rich, welcome to the lab. You know why they call this the lab, by the way?
No, I did not.
Well, listen, when you come in here, Rich, you're officially lab verified, brother.
Okay.
Because we only bring people, we're not just writing books about this stuff. They're doing it. They're practitioners. So when you wear that lab coat, you're coming in because we believe that in real estate, it's a large umbrella. And you can go into wholesaling, you can go into flipping, you can go into that. And those are all what we would call experiments. And when you find that experiment, it's good that you get a good taste of the experiment. Then you double down on it, which is exactly what you're doing. So I cut you off. Welcome to the lab, but now you know why you're here and why we call it the lab. So how you doing today, Rich?
Ruben, I'm doing amazing, man. I love the name, the lab. It's very authentic, and it's true to what you're doing. So appreciate you having me on, and I'm excited for this conversation today.
Yeah, for sure, man. I mean, straight to business, man. What I like about you, I got to give you a kudos to your online presence, because I think it's so beautiful. I get a chance to meet people that I feel like I know, and I know that's important for you, and it's very strategic as well, but it's at the same time very genuine, which I appreciate, is an authentic. So I guess when did you what came first? Because I want to talk about, was it did you first always get into social and then got into your first deal? Did you get your first deal and then you're like, hey, let me double down on this thing because I need to tell the world what I'm doing? Tell us about like that first kind of transaction or investment in yourself, and then also at the same time, when did the social come in? Because I want to just tap in on two assets.
Yeah, for sure.
Yeah.
Well, like you mentioned, I was a government employee for about 11 years as an air traffic controller, controlling airplanes on radar scopes. And along the way, I read the book Rich Dad Poor Dad, and I started learning about real estate investing and producing passive streams of income and cash flow. And I just became obsessed, man. I was like, I need to learn more on how to do this. And I started reading more books and listening to podcasts, and I started going to networking events. here locally, and I started meeting people that were doing deals. And I cashed out my 401k and I pulled out a home equity line of credit against my condo that I was living in as a primary residence. And that was my seed money to get started. My first deal was 11 units in Cincinnati, C class value add deal. It had all the problems. And then shortly after that, I partnered with a couple guys and we joint ventured on a 32 unit value add deal in Indianapolis. And fast forward a little bit, learned how to raise some private money, brought on a mentor, started taking down some larger deals. And I think one thing that a lot of people overlook is like probably 85% of my portfolio is multifamily apartments. But right now, I'm talking short-term rentals and boutique hotels a lot. But yeah, to answer your question about the social media, man, I did a lot of the real estate stuff first. And then I realized, man, like I'm doing some cool stuff. I should start sharing what I'm doing and start putting out a little bit of content. So I started putting out content about 9 months ago now.
You know what? I love that because I have that conversation all the time when my buddy, I'm trying to get into social. I'm like, dude, when you get results, like you'll get attention because you're a good source, right? And it's easy to tell who has the level of depth of knowledge, right? Like I've seen your videos about how you structure your LLCs and like your holding company. I'm like, you can't fake that, right? And so I think it's really important because I would say I'm contradicting myself a little bit because, well, I took a different path because I was humbly starting by interviewing people, and that's how I got my knowledge, right? And it was from a humble approach, and then at the same time documenting my journey, right? Of hey, this is what I'm doing. I was a big Gary guy. I was like, document your process, so that's what I did. But at the same time, sometimes we want to make sure that the documentation of the process doesn't overtake the amount of time that you should actually be working on your business if you don't have the ability to do both effectively. And so I want to echo that because 9 months, and the reason why you have such a large following is because at the end of the day, you got results.
Yeah, no, absolutely. And you hit on the nail there. I think everyone should document the process. It's free to post. And I'm a big believer in social media, especially. I wish I would have started doing it a little bit sooner for sure. But like you said, a lot of the content that I put out, because I know it, it just flows, I'm not having to think about what I'm saying because I've done it before,
Yeah. Now tell me why did you, like, in hindsight now, did you specifically go after multiple units in as one of your first deals? I mean, I know you had the initial one where you were living, right? The condo. And then you did the HELOC into a big, was there a seed planted there from that I should go bigger right away? Like, where did that come from, especially going into your first deal?
Yeah, it really came from reading books and listening to podcasts and listening to people that were investing in multifamily. A lot of them tend to say, hey, go a little bit bigger if you can. And so that's kind of what I was thinking initially. That was my mindset going in. And I wanted to become a multifamily syndicator. And that's what I did. And it wasn't until late 2021, early 2022 to where I decided to make a pivot and start, really scaling the short-term rental stuff. And then it wasn't until I was August of 22 when I took down the first boutique hotel. And that was when I first realized, okay, well, this short-term rental management company that I have, we can use this company to operate boutique hotels the same way we do to operate our short-term rentals with a self-check-in, self-checkout model. And, multifamily right now is overheated. We were looking at a lot of deals, especially after COVID in 21, when interest rates went down, there was just a lot of money looking for the same deals. And so I found it very counterproductive to continue underwriting larger multifamily deals when there just wasn't a lot of deals out there to be had. And on the flip side, the boutique hotel space, I feel like there's way less competition. There's less people looking for these types of assets. And I feel like because of this management arm that we have and, having the ability to be fully integrated and self-managing, it gives us full control, but also a competitive advantage that I didn't have in the multifamily space.
Okay, I love that. So you follow the blueprint, multifamily, then you're analyzing, there's kind of a shift. Would you say, and again, I don't know how long you've been in the multifamily space. Do you think it's I know there's tons now, right? There's the grants, there's the I had him on the platform, Jake and Gino. there's it.
Mhm.
Is that new? Like, is it just you think it's being marketed, or has that always been? No, it's actually always been cutthroat, Ruben. I gotta look at 200 deals to get one. Like it, like you tell me, because I'm not in that world. I've tapped into it a little bit, but for context, has the competition truly been increasing? And I hate to use the word saturated because again, business is business. But
Mhm.
what are your thoughts on that? Has the landscape changed a little bit?
Yeah, well, part of it's the market cycle, and the other part of it is, over the last decade, a lot of the operators have gone in there and bought up all the value add properties, and they've already put a lot of capital into them and fixed them up. And so you're seeing that, and then also the market cycle. Right now, cap rates are very low, whereas 5, 6, 7, 10 years ago they were much higher, and so it was easier to find yield. And then the third thing is exactly what you mentioned is there's just a lot of educators out there that weren't there probably 10, 15, 20 years ago, which is a good thing and a bad thing, right?
Mhm.
I think it's good to share knowledge and it's good to create healthy competition. But I feel like there's so many multifamily educators out there right now. You mentioned a few of them. There's dozens more. I feel like everyone and their mom is doing it, which is cool, but it just makes it a very, very competitive environment for someone like myself. And so I feel like, you got to zig and zag,
Yeah.
and you got to pivot. And that's what success is all about.
Yeah, let me ask you on that for a second because I see an opportunity based on my, you know, your respectable small portfolio on the STR side. I'm like,
Mhm.
why can't you do this at scale? Like I always say, if you own a 30 unit, maybe,
Mhm.
and maybe I'm asking for insight here because you've been on the multifamily side. Is there a
Sure.
reason why multifamily operators, is it that they don't understand or know the opportunity of saying, like, all right, I have a 30 unit building. I'm going to take 10 of those units. I'm going to furnish them and I'm going to do what I was talking about offline, B2B. And I'm going to literally have a diversified asset. Is it too disruptive? Is it, you can't run a hybrid? Like I always wonder like why, and again, I might do it if you give me the green light, if I get your blessing, Rich, what's the, is there a disconnect there that isn't
Mhm.
happening? Can you maybe give a little insight on that?
There are some operators that do it, especially with these bigger like properties. They might allocate 10% of their units to that model, and they'll bring in
Mhm.
like a third party operator that will come in and basically lease those units, and then in exchange they get to, pocket the spread if they're able to bring in more or additional revenue. So there are some properties and operators that do that. I also know of a lot of new construction build apartments to where, let's say, they're trying to lease up 600 brand new units, and so they'll bring in an operator like that that can, come in and furnish 50 of the units and start bringing in some revenue, because some of those properties will take a year and a half, 2 years to lease up. So there are some companies that do that. But I think to answer your question, a lot of operators on the multifamily side don't do it, one, because they don't know how to, but two, it is a lot more workload intensive. And so I think for them, they don't see it as a good return on their time, to where they'd rather be focused on buying more assets and that sort of thing. But then you also have to think about, if you're operating 50% of your units as midterm stays, what is that going to look like to the next buyer? And what is that going to look like in terms of lending if you go to refi the deal?
Well, okay, so I'm glad you went there, Rich, because that's exactly where I wanted to go. Before I got into SDRs, I was like, why would you do short term? Like before, I didn't
Mhm.
understand. Before, basically, shout out to Michael Shogun. Before Michael Shogun,
We love
kind
Mike.
of showed me that's my guy, man. Shout out to Mike, man. Um, I was like, what? What are you talking about? 100% occupancy on long term rentals? What do I look like dabbling and having a calendar that's 40 to 50% occupied? Right? False. You run the numbers and you're like, hold on, at 50 or 60 or 70% occupied, I can 3 to 5x what I would make on an LTR. So if I take
Mhm.
that same blueprint, and again, I'm here for insight, and I apply it to a multifamily building, I can actually show that my net operating income is higher based on that hybrid of properties on the short-term rental model within the building that are actually helping increase that. Now, I'm curious to hear if maybe, because I know now there's DSCR loans on the single family side, etc. I'm curious to see if that the lender underwriting that would see that as an unstable kind of operation. I'm curious.
Mhm.
Like, what is your take on that?
Yeah. Well, I've actually looked into acquiring like smaller multifamily, like
Yeah.
let's say 10 to 12 units here
Mhm.
in beach areas of San Diego. and then furnishing the property, and then operating it as either short or midterm stays for additional cash flow. And I've talked to some commercial appraisers in regards to how they would view that on the refi. And what they told me was they would, obviously the comps, they would still have to use multifamily comps and make sure that it's within a specific range. And they would actually use long-term rent comps within a specific set in terms of multifamily to size up the deal and appraise the value of the property. Now, this is just one appraiser. This is not verified by multiple appraisers. Maybe that's just how this one appraiser would look at it, but that's at least how I was told.
Interesting. So they're not looking at you. I can't show them my P&Ls and be like, hey man, I'm on fire. Like, look at my 80% occupancy. That's not enough to justify they're still going to go to the comps.
Yeah, because think about it this way. So let's say that you have a 12-unit multifamily property, and because your NOI is double what all the other multifamily properties are in the specific area. And so let's say instead of that property, like here in San Diego, a 10-unit multifamily property by the beach would probably go for about $5 million. And so let's say your NOI is double that other property. Theoretically, if you're going by the income approach, the property would be worth 10 million. But that appraiser told me, hey, we're going to look at all the comps. And so if you're looking at a 10 million valuation, but all the other apartment buildings from a sales comp perspective are only trading at 5, they're not going to give you a $10 million valuation. This is at least what I was told.
Because essentially then what we're saying, Rich, is that the management operation is what's grossing that amount. It's not really the value of the building. Is that how you would summarize it? Or
yeah, that's how you could summarize it. But I mean, there could be a workaround, and I don't know how they would view this, but like, what if you brought in an operator, or maybe you were the operator and you have a managing entity, and what if that managing entity signed long-term lease agreements with all of your units, and then at a premium, and then you took that to the appraiser? I don't know how they would view that. I'm not sure. But this is exactly why, like right now we're buying boutique hotels. People always send me off-market multifamily deals and say, hey, you can operate this like a hotel. And I know of operators that do that. I don't want to do that. I only want to buy properties that have the hotel zoning, because I know that I'm going to get all the credit and valuation upside when we go to appraise these properties on the refinance, because of all the stuff that we're doing, all the marketing platforms we're on, all the renovations and that sort of thing.
Okay, I'm so glad you went there, because that was gonna totally. And you're like a point guard over here throwing off the backboard for a slam dunk, because I was gonna transition there and into where you actually went. You came from the multifamily, and now you're going boutique hotel. And I was gonna ask you, what is the difference, right? And is it from what I understand, I just had Dia on our platform. She was a lawyer who's kind of just buying hotels now, and she gave us a little bit of game on this. But just so I understand, is it that when you operate as a hotel, the financing is hotelier financing, and it's completely different, and because it's true, and it's an industry that they know they actually evaluate the deal differently than they would or underwrite the deal differently than they would on multifamily? Is that correct?
For sure. I think, to break it down simply, I think a multifamily deal, they're going to look at the long-term rent comps and make sure that they're in the window, regardless of how you're operating the property. But if it's a hotel that's got the hotel zoning, they know that you have transient guests that are staying for one night. Maybe your average guest stay is 2.5 nights for the year, but they're going to give you the credit for all of that. So if I can buy a hotel, I think there's a lot of mom and pop operators out there that own these hotels, and they've owned them for decades and decades. They're not utilizing a lot of marketing platforms. They're definitely not on Airbnb or Vrbo. And that's a big play, just for us to take over a hotel, even if we didn't do any renovations and we just marketed these rooms on Airbnb and Vrbo, we would bring in a massive tick up in revenue.
Experiment Nation, I have a special gift for you. If you're in the Airbnb space, or if you're thinking of getting into the Airbnb space, you're an operator with multiple units, your first unit, your 100th unit, just about to get into Airbnb, you are going to want to get this blueprint that I put together for you. Now, I want to give context of how this was put together, because sometimes people assemble these ideas and top 10 lists, top 5, top this, and it doesn't have any true valued, vetted content. What I've done is I've surrounded myself by the best top short-term rental Airbnb operators in the world. I co-authored a best-selling book with them called Hospitable Host. I've had them on my platform and interviewed them to get the questions that you guys want to learn the most from into the episode, the show, The Real Estate Experiment, as you know. And I've also paid tens and thousands of dollars to be sitting in the room to get these notable insights that we implement ourselves as short-term rental operators. I'm a short-term rental specialist. I'm licensed to do it in the respective markets. You know, we build ours in Georgia. We have a management company ourselves. We're Airbnb superhosts. So we not only talk the talk, but we walk the walk, but we still consistently surround ourselves with the best in the space to get us further ahead. And this is what we've put together, an Airbnb Millionaire Blueprint, where you don't just hear it from me, you hear it, and it's an aggregate list. It's 21 pillars from short-term rental operators worldwide who've implemented this and it's worked. And these are the exact same way we've been able to get results and get the same results from implementing these insights that I've pulled from multiple faces, right? Some people have tons of arbitrage units like TJ Tijani. Some like Bill Faith have just a few. Some like Michael Shogun has boutique hotels. They've scaled, and whether you have 1 unit, 10 units, or 100th unit, or about to get into your first unit, you're going to want to have this blueprint that you can utilize universally wherever you are in the world. Want to get this. I put together, we took a lot of time to put this together this year after all that we've been implementing in our lab, for you to have a guide that you can leverage, right? That you can use and implement. We've also given and tagged everybody that we've featured in and giving them credit, so you know where the source is coming from, and you can check out their Instagram. You can see that they're vetted individuals that we not only work with and trust but learn from, because sometimes you get a lot of different information, and I want to make sure I give that credit where you can find out that person. And we've also, if they've been on our show, we've also linked the episode within this free blueprint. It's the Airbnb Millionaire Blueprint. Want to make sure you go to experimentrealestate.com. Once you get there, you'll see the pop-up that says I have something for you. Just scroll down, enter your name, enter your email, and we'll get it right sent to you. Don't want to sleep on this. We've been putting this together for quite some time, and I know that it will serve you regardless of where you are in your journey, to have an Airbnb Millionaire Blueprint that has been collectively vetted and has been sourced from operators who are operating at a high scale. Experiment Nation, you're welcome. Make sure to go to experimentrealestate.com and get your Airbnb Millionaire Blueprint, so that you can also scale to the level of experiment that these practitioners like ourselves have done just for you, Experiment Nation. We'll see you on the other side. What do you think that is at a high level? Again, we're not going to hold you to that. Like, are we talking like 10% here? Like,
well, I'll say this. We just relaunched our 10-room hotel up in Northern California that's beachfront after the remodel. And I was looking at the calendar last week. We had almost 100% occupancy across all 10 units last week, and more than 50% of those reservations were from Airbnb. So think about that.
Love that, man.
Yeah.
Dude, Rich, that's exactly where I was going to go. You have, and you mentioned it a little bit, and I want to highlight it. You said you have this management expertise, all right, or this arm that you're now plugging into, which includes the tech stack, includes, right, everything. Can you give us some context though? Because we heard about the multifamily part. Then you mentioned STRs, but I don't know that I have a full understanding. When you mentioned STRs in your portfolio, what did it look like? Where did you get this experience of like the whole Airbnb? Were there a single family? Were there some, I think a few single families? Is that what it was?
Yeah, I kind of backed into it. Back in 2019, I had, this is when I was still working the air traffic control job. A local credit union gave me a pre-approval for a no money down mortgage, primary residence. And so I found a brand new construction 2-bed, 2-bath condo in a good location here in downtown San Diego. And I bought it, lived on the property for a little bit while I set it up, and then I converted it into a Airbnb. I literally didn't know what I was doing. I just threw it up there. And this thing just stayed. I don't even know where I got the idea from. I think I knew that like I had heard of people making a lot of money on Airbnb. And so
Yeah.
I thought, okay, well, if I have 100% loan, why wouldn't I buy this thing and throw it up there and see what happens? And so I wasn't really thinking more than just a couple steps like that, but threw it up there, it did well. And then I thought, okay, well, how do I buy another one? And so I went back to the same credit union like 6 months later and I said, hey, can I get another pre-approval letter? And they gave me one. And this is like right when the pandemic dropped. And I went and bought a 3-bed, 2-bath house here in San Diego with a brand new ADU or a studio unit in the back. The seller had just built the ADU. They had just furnished this property and they threw this property up on Airbnb, and that was their intent was to hold it long term. They actually had a couple reservations on the books, but COVID hit and they got scared and they listed it on Mother's Day. And I'll never forget, it was raining. It was Mother's Day. I went to go tour the property. It was the first day it was listed. Turns out the listing agent was also the seller. And I was walking the property and I just saw this opportunity, man. I'm like, it's furnished. It had a garage below the ADU that happened to have 10-foot ceilings. It had a level slab. And so this property was actually zoned for 4 units. And so I thought, okay, it has value add potential. I could build more units.
Do you have water there? Do you have water hookup to the ADU?
Yeah, you need to run some more plumbing, but the sewer line's right there. The plumbing is close to it, and then it already had electrical, so it was pretty easy. But anyhow, long story short, I told her right then and there, I said, hey, I'll give you whatever you want for it. Let's tie it up right now. So we tied it up that same day and closed on that thing, man. And that thing's just been cash flowing great. I got it, no money down. The furniture was included. I even negotiated her to throw in the closing costs in addition to that. And then I was able to negotiate like a pretty good repair credit. So I actually got paid to close on that deal. And then that thing's been bringing in anywhere from like $12,000 to like $18,000 a month in gross revenue every single month since I've owned it, which is crazy.
Where's that located?
That one's located here in San Diego.
That's bananas. What was the price point on that?
Bought it for $895, and I would say today it's worth about 1.2, maybe 1.3, and then we're getting permits to build that 3rd unit, and so I think at that time the ARV will probably be like 1.5, 1.6.
Your market, man, the appreciation market, and I know you geek out on like you swear by California, which again you have the receipts to show why. What was the just so for our listeners, what was the no money down program that you used?
Yeah, it's a Navy Federal Credit Union. Anyone can become a member. If the easiest way is if you have like someone that's like a friend or family member, it could be like a grandparent that was like in the service. But if not, you can still get in. Just find someone that's in and just go in and open a joint account with them, and then you can branch off after, and then that will give you access to these no money down loans. FHA is great, but this is 0 money down and it's not VA program, so it's nice. And when you're signing those loan docs, all those loan docs are saying is at the time of the signing, I have every intention to live on the property as a primary residence. And what happens after, your plans can change, right? People go through divorces, people get uprooted, they get, they go through job transfers, and the lenders know that, obviously. So I think as long as you're servicing your debt service on time, they're not going to get you in trouble. Why are they going to get their own client in trouble that's paying them cash flow every month, right?
Exactly. and plus, usually there's a rule out there, whether it's 6 months or 12 months. You just read it and play by the rules.
Well, look, move into the property and live there for a little bit while you set it up. The utilities are under your name, and hey, 2 months later, guess what? My plans changed and I decided to move. What are they going to say?
Exactly.
You know what I mean?
Facts. Yeah. No, I had no idea about like you need a plug. Hey, we got a plug. I mean, I know Rob. I know Rich. So I don't know. Maybe you can make a little call for it. Now that's really cool. That's good for people to know their resources. I'm always, every time I'm engaging with people, I'm like, dude, tap into this. Have you looked into that? Like it's who, not how, man. So thanks for that. To bring it full circle. So that was the blueprint, and you saw this. You're like, okay, cool. We're cash flowing, appreciating. And was that enough to kind of give you that permission to say, hey, you know what? Why don't we do this at a bigger scale? Because a lot of listeners might be listening, are like, hey, like I have a couple, single families like myself, and it's like that next jump. How realistic? I don't like to use. I want to be mindful of how I choose my words. I don't like the word realistic. But how does the transition? How similar is the transition from a single family to a boutique hotel? And then what are some of those maybe blind spots that you should be like, hey, that's not going to be the same?
Yeah. I think there's a lot of similarities. I'm probably not the best to answer this because I'm not like super in the weeds with the operations, but I think, obviously the boutique hotels is more scalable. You have the economies to scale. So, you might have 10 units under one roof and you might be leveraging the same housekeeper, or the housekeepers might be on payroll, right? Versus having cleaners just come per clean. But also the maintenance, any vendors that you're working with, it's all going to be the same vendor. And so I think it's a lot easier to scale if you got multiple units under one roof versus a single family here and a single family there spread across different markets around the country.
Yeah. Okay. So I know you might not be the operations guy because you're so great at building teams, but I know you're my numbers guy. So let's talk money for a second. When
Okay.
you're looking at your P&Ls, right, on the
Mhm.
multifamily side, because I really want to level set. I like just being very like practical. Like you look at the multifamily, like, okay, word. And then you look at like the boutique hotel.
Mhm.
And when you look at both your P&Ls, what's an expense on the boutique hotel that stands completely apart from the multifamily that you're like, hey, we always got to factor this in because you'd be surprised, but whether it's linens, etc. I'd be curious to hear, is it the operations, the management that's baked in? What jumps out to you as an expense, and then we'll get what jumps out to you as like the money makers. Yeah.
Yeah, I mean, obviously, the expense ratio is going to be much higher with like a boutique hotel. What jumps out at me, you got your housekeeping, of course. You got your OTA fees. You're going to have credit card fees and all that sort of thing. And so you got to like account for all that sort of stuff. And then you're going to have a little bit more payroll versus multifamily property. Management expense is going to be a little bit more, unless you're self-managing like we do. So it just really depends. But management is also going to be a big one. These larger apartment communities, you might only pay a 3% management fee, but you're going to have, payroll. You're going to have, on-site leasing. You're going to have on-site maintenance. But with these boutique hotels, you're gonna also have more payroll, right? Like you're gonna have housekeepers. You're gonna have potentially maintenance, depending on how big the property is. But those are the big ones.
That's what's up. And then as far as like, okay, we're here in the lab, you got
Hmm.
it all lined up on the table, and
Yeah.
you're like, okay, we're really gonna jack up the value. Would you say it's the same foundation of a value add asset, or is there something, again, I think we talked about the tech stack, which is a big one to me. Like
Hmm.
you're like, hey, we're gonna like Airbnb, we're gonna use OTAs, right? We're gonna really, that's
Hmm.
really gonna increase our revenue. That was one thing. What's another thing that you feel exists in this specific space of the boutique hotel that really helps increase either the cash flow or even the valuation of the deal? Because I know you always do this very strategically when you're buying these assets.
Yeah, I think it's simple. It's really just two things. It comes down to the renovation package.
Mhm.
So we like to buy the tired assets, and we like to get them at discounts. And so going in and doing a full renovation, and then the redesign with the furnishings. That's a big lever, right? And that's what you're going to utilize to attract guests that are going to pay top dollar. And then the second big lever is the operations and how you're marketing the property. So we'll be on Airbnb, Verbo, bookings.com, hotels.com, Expedia, all those different OTA platforms. And then also, obviously, we still have the direct booking website as well.
That's what's up. Yeah. And then as far as I know I've heard about some crazy case studies that you've had. And do you feel that when you are doing the value add and do the tech stack, do you
Mhm.
feel that the returns that are, if you do it the right way, on the hotel side, when you're
Mhm.
underwriting the deal again, do you feel that you can pull out more cash than you would on a traditional asset class of multifamily? Or do you feel like, no, Ruben, honestly, it would be the same. I just choose to do it in the hotel space. There's no kind of advantage that I see. Just curious.
Can you say the question again?
Yeah. So basically, when you're comparing, you're like, hey, I'm going to do a value add on a multifamily, like that
Mhm.
11 unit or 30 unit that you talked about. Do you see that you can have the same impact with the same amount of money by doing a value add in multifamily, or do you feel that it goes a little bit further in the boutique hotel space, or maybe it's just the same and you just choose to do it in boutique hotels?
Yeah, I think you can get better lending and you can get better leverage, generally speaking, for multifamily. So
Hmm.
dollar for dollar, I think your dollar goes further with multifamily. And also, like when you go and renovate a multifamily deal, you're not necessarily going to rip apart the entire property and completely redo it. I think a lot of you can buy multifamily deals that are, with existing in place cash flow. And then you can, lightly renovate a lot of these units. I would say most operators fall into that realm to where they're putting anywhere from $3,000 to $10,000 per unit in their renovation package for a multifamily deal. Now with a hotel, you can easily spend, $30,000, $40,000 a unit renovating the hotel. So I think your dollar definitely goes a little bit further with the multifamily. And I think the extent of the renovation is probably going to be a little bit more extensive with the hotel, because it has to look nice in order to attract guests that are going to pay top dollar.
Yeah. Do you just like it more, Rich? Was it just honestly a
both,
business
man.
move?
I love both.
Yeah.
There's going to be a day where we're buying apartments again for sure. The cash flow, I think, for the short-term rentals and the boutique hotel stuff is stronger, which is good. But the equity growth with multifamily and the risk-adjusted return, I love in multifamily. So I like both. Yeah.
I like that. Good answer, man. What's next? Because I'm like looking at you, man, and I've heard you say your big ass hairy goal with 25 million hotels in the next 12 months, which sounds like you're doubling down on that. Sounds like, do you want to create a fund? Do you want to create like syndicate each deal and then maybe some multifamily on the side? Like, how do you see right now? And I'm curious because you're a very, like, I see you, like when you commit to something, you get it done. So right now, maybe I could take a page from your book, and so Experiment Nation can do the same. Are you analyzing only boutique hotel deals, or are you also like, hey, you know what? We understand both, and if it makes sense, we will go. I'm just curious as to how you kind of structure your strategy for like next quarter or next year. Like, how does that look?
Yeah. I don't like to think out too far in advance, right?
Okay.
Because a lot of people talk about 5-year goals and 10-year goals, but if you have a 5-year goal or target, and your goal doesn't change 5 years from now, then that means that you're not growing, right? And so I think it sounds nice to have a 5 or 10-year target today, but next year that target's going to be different because I don't know what I don't know, right? And the landscape's always changing. So for me, we're typically not looking for more than a year out. So right now we're just focusing on 2023 and hitting, acquiring $25 million worth of hotels as of right now. There's going to be, the market will shift, right? So right now, we feel like we have a competitive advantage buying boutique hotels, but when I was at Bigger Pockets conference this past October here in San Diego, and everyone I met was doing short-term rentals, right? And a lot of those folks were telling me like they can't wait to get into boutique hotels. And so I think a lot of those folks, that's a natural progression. You learn how to do the STRs, and then you want to go buy some boutique hotels. So I think you're going to see a wave of demand enter the boutique hotel marketplace between now and the next 2 years.
Yeah, and you've mentioned this before. Like there is that the mom and pops who are really not leveraging technology, and so you see that that's again number one advantage point, that if a seasoned STR operator on a single family has to bring to that to that asset class. Correct?
Say that one more time.
I was gonna say that I think you've called this out in the past, that you see that the technology is already an advantage that a lot of the STR operators have. And so kind of transitioning into boutique hotels, that will be a smooth kind of transition for them, right?
It really is. I mean, I think there's a lot of similarities to how you would operate a 10-unit boutique hotel. It's not really different than having 10 single family short-term rentals.
That's what's up. So someone who's out there listening and they're thinking of getting into the boutique hotels, as far as I know, you got your systems down. What does that look like? Is it, hey, listen, I got to get a broker who specifically does hotels? Like, what's my next step if I'm thinking of this? It's I got to build my brand and to kind of show that I can do this. I got to find an operator who's already done a hotel before. Like, what are some things like fundamentally that I need to have when I'm making this jump, so that, from a financing perspective, I'm taking seriously, from a, operations, maybe I already need to have a team. Like, just what are some, maybe, again, I know you can't give us a whole master class in 5 minutes, but I'm just curious as to what are some key takeaways that I need to start planting and start researching so that I can kind of position myself for that.
Yeah, the main things are the underwriting. So you got to learn how to analyze these deals. They're going to underwrite a little bit differently than a single family short term rental will. The second thing is the lending. This is a commercial loan product, and there's bridge loans and private equity loans. There's a lot of different ways to take down a deal. Seller financing is very prevalent in boutique hotel space as well. So learning how to determine and source the appropriate debt. That's big. So I would start reaching out to people that are doing it and start getting, maybe some warm introductions to lenders, like good lenders in the space that are credible, and talk to them and tell them what you want to do and see what kind of lending that you can expect. But I would say if you can source seller financing right now with hotels, that's the preferred way to go. It's just much easier. It's quicker. Getting any sort of like institutional lending right now for a hotel is a lot, right? Especially with what's going on in the economy and the volatility and the interest rates right now. So I think seller finance is key if you can do that. And then I would say, lastly is, you're probably going to have to raise money, right? And so if you've never raised money before, it's probably smart to go connect with folks that have done it and maybe bring them in as a co-sponsor for your first deal or two. Because at the end of the day, you don't want to go raise money from others if it's your first time doing it and your first time buying a boutique hotel, because at the end of the day, you want to sleep good at night, right?
100%.
Yes.
There's a lot of pressure as there is. Real quick on that, on those two things that you said. Commercial lenders, are all commercial lenders or hotel, are there specific hotel niched lenders out there that you leverage and get your loan from?
Yeah, there's really 4 types of loan products for a hotel. You got SBA financing, which is basically a small business loan. We're sourcing that right now for the hotel that we have under contract here in San Diego, and they go up to 85% LTV. And then another loan product is you got private money, right? So you can, take on a bridge loan or hard money loan. Short-term debt, it's going to be expensive, typically 1 to maybe 3 years. And then that's good if you're going to do a big value add project, renovate, and then refinance out of that loan into some permanent financing. You got seller financing, of course. And I would say those are the main ones.
Got it. And on that last one, in the seller financing, is that something where I would still want to be very similar to maybe even single family, et cetera, have a proof of funds? I'm showing that I'm ready to go, but hey, by the way, like, let's have a conversation. Is there any chance you might be interested in seller financing? It's not like right out the gate, hey, I want seller financing. Is that how you would see it? Or is that, did I miss that?
Yeah, and real quick, there is another loan product out there that's pretty prevalent that I overlooked. So like a lot of local banks and credit unions will finance hotels in their local market. And so you can go on CoStar and you can pull up any specific hotel in whatever market that you're looking at, and you can actually see what those hotels in that market, what kind of debt they have, and it will typically tell you the name of the bank that financed it. So if you find a local bank that's financed a bunch of hotels in the area, that's usually a good option for you as well. But to answer your question, remind me again.
Yeah, it was more like, you don't come into an offer with like, hey, by the way, like,
Yeah.
you want to spot me. It's more like you come prepared, like you have your proof of funds, and then you kind of start the conversation saying, hey, are you interested in carrying this note? Is that how it is? I gotta have no context.
So typically, I just ask the broker, like, hey, is the seller interested in seller financing? And sometimes they might say, I don't think so, but I'm not sure. But then I usually follow up with like, okay, well, what is the seller going to do with the proceeds? And so I know if the seller's older, they're retiring, then, if they're not going to utilize it to buy another deal and they're just going to stick in the bank, well, I know that person's a good candidate for seller financing because it's going to be a much smaller tax event for them. If they can seller finance a deal, they're going to get cash flow or mailbox money post close, which is appealing for a lot of these sellers. But on the flip side, if it's a seller that is going to be 1031ing into another opportunity, or they're younger and they need to, let's say they're going to return money to the investors or whatever it is, I know that person's highly likely not going to finance the deal for us. Right now, the one that we're buying, they're not, it's a big private equity group out of LA.
Yeah.
And they got like $1 billion worth of assets, but they got investor money and that sort of thing. So they're not willing to seller finance. But it's okay. There's other ways to take it down,
That's dope, man. So it's, again, it goes back to the basics of fundamentals of business. Like, what is the need of why are they selling?
But lending's tough. I'll say lending is tough for hotels, especially if you're going to be raising funds from folks. So if you can secure seller financing on a boutique hotel, that's 110% the way to go.
Yeah, mom and pop looking to kind of step away from the operations. They're tired.
Mhm.
They want that annuity, essentially, mailbox
Mhm.
money.
And those are typically the properties that have a lot of upside. You know,
Upside is in a lot of work, a lot of value add
well,
opportunity.
the properties typically haven't been renovated in
Dilapidate,
decades.
yeah,
And then in addition to that, the mom and pop sellers are not on the up and up with
tech
technology. And
savvy.
so they're
Yeah.
not marketing on all these different platforms. And so there's your value add component. Where if you're buying a hotel from an operator like us, there's probably not a lot of value add potential there,
Mhm.
right? And
Yeah. So you look,
we're not gonna sell or finance it either.
yeah, you're looking for that notepad, like bookings and like, you know what I mean? Like this, like kind of like old school kind of opportunities. That's
Mhm.
awesome, man. Listen, Rich, man, you over delivered once again. That's your brand. That's what you do. So thank you so much. I know exactly where I can find you and tap in. I know here you're on Instagram, Rich_Summers. You're doing your thing, but where do you want to give an opportunity for the rest of the community to tap in with what you're doing with Summers Capital, FortuneCribs, etc.? Where can we tap in, man?
Yeah, absolutely. We're actively looking to scale our management portfolio. So we are managing, a lot of luxury short-term rentals around the country. We're currently in 9 markets, and we're looking to grow our boutique hotel management portfolio as well. So if any of your listeners out there are looking to take down some boutique hotels or have one, we'd be happy to manage them, and we have a referral program out right now, a couple of them. I'm going to drop
Mm,
it for your listeners. So if you refer us to someone who owns a boutique hotel or STR looking for management, we'll cut you a check for 1,000. But more importantly, we are looking for deals. So if any of your listeners are able to bring us a deal, off-market boutique hotel deal between $2 and $10 million that we close on, we will cut you a $50,000 finder's fee, which is pretty cool. You can check us
that's
out,
really cool.
summerscapital.com for management, excelsiorstays.com. And then I'm very active on social media, Rich_Summers, SOMERS. And I got a new podcast called The Rich Summers Report.
You guys gotta check that out, man. I'm always posting lots of gems. By the way, you're a great interviewer, and I interview a lot of people, and so you are just a natural. So keep going, brother. And listen, I'm so happy to see what you're doing with Summers Capital, and honestly, you're inspiring me. So thank you for inspiring me and being able to share that with my community, man.
Ruben, I appreciate you, man. It's been a pleasure chatting with you, and I'm glad that we finally got a chance to connect. And I'm excited to follow along your journey, man. I love what you're doing, and I'm a fan.
Appreciate you, brother. Just like that, we are out.
Experiment Nation, podcasting has changed the way we operate as real estate investors ourselves, and it can do the same for you. Podcasting has been the source of the masterclasses that we get thanks to the world-class real estate investors and practitioners and specialists that come into the lab from all realms, from short-term rentals to mid-term rentals to real estate syndications to even software as a service. Owners, founders, entrepreneurs have helped enrich our experiments by giving us the education, helping us build a network, and lastly, and most importantly, a brand association to open up multiple doors for our respective businesses. If you understand the power that podcasting can have and you know that you need one for your brand, please, you can rely on our team. InvestedTalent.com is my team and the team that helps this podcast, the Real Estate Experiment, become the fruition each and every single week to educate my community, build relationships on the air, and continue to build our brand. If you know that you need to do the same for your brand and you haven't pulled the trigger yet, maybe because you don't know how, our company, InvestedTalent.com, does the end-to-end from the time that you record, from the time that it is published, to even repurposing content on multiple social media platforms. That's what my team can do for you. Simply go to InvestedTalent.com and book a discovery call to see how my team can help you launch your podcast.